Christmas to you too, Glenn. TGIF, Patrick. Everybody, hope everyone had a great week. So just kind of like Groundhog's Day in EG. So last Friday I talked about the false breakdown, that to me it looked more like a 3 driver. I think it showed up pretty good on the daily. Yeah, 1, 2, 3, or even this 1, 2, 3. And here we are. I had a week to negate it. Did not negate it. 4 hour looks cleaner. Pretty symmetrical for a right shoulder. Earlier in the week I said 760 to 740 would be a buy zone. We got to 760 yesterday, and here we are pushing the envelope. Potential breakout over this moving average at 88.5. Measures 90. Pretty good weekly close. So that's intact. Everyone with me on that? Hello, Kareem. How are you? So I want to talk about a couple of things. I think Aussie's close to running its course for this move. I don't want to outright short it. It's had a pretty good week, but maybe we get one more drive up here next week. And with the way the Euro's acting, just something on my radar for next week would be Euro Aussie from the long side. You may want to write it down and keep your eye on it. Where are you, Euro Aussie? Here you are. Okay, so we've had 1, we've had 2. I'd like to see one more shot down sometime next week. Still a negative week, so I'd like to see these lows taken out next week. And then I think you could get a pretty good rally. In fact, there are some counts, and I'm going to check it out over the weekend, and you should too if you're ForexAnalytix subscriber. I think that Greg still has higher targets than this move right here. So if you look at it from a daily perspective, this could just be seen as a normal pullback, getting a low reversal today against maybe the breakout. Maybe it does a little work down here next week and then look for another high. So this could be setting up because Aussie might be reaching resistance here, and I still remain constructive on the Euro, even though it's not flying, and there are willing sellers on every pop. Still looks pretty good to me. Hasn't done anything wrong. I think eventually we challenge this 119 level. Still looks like a flag formation and still looking for new highs. So I also look at the Dixie, and I've been on the same page as Blake for a while. We had that pretty negative turn on Tuesday trying to recover here. But it's my belief there's potential for us to challenge and take out these lows in the Dixie. This is a bigger picture for me. The weekly, you have this hit here on the weekly trend line, this hit here. We didn't get here, we didn't hit it here before we had this rally. So I still think it's possible we head back down to 90. And because Euro's so heavily weighted in the Dixie, that should take the Euro above 120 if we're going here, maybe 121 and change. I have a great guest today, Jeremy Schwartz. He's with Wisdomtree. Those of you that aren't familiar with Wisdomtree, they're a big player in the ETF arena. And Jeremy's going to be talking about currency ETFs and some of his outlooks for currencies based upon it. So stick around for Jeremy's interviews. That's about all I have to add for today. S&Ps still don't look like they're done. Still a decent week. I think we're getting closer. I'm going to ask Steve if he has another fib extension above the one that he has here. So on a weekly basis, unless we fall apart, not getting a sell signal, even though it looked pretty ugly yesterday, it looked like Santa's sled was sliding off the snow. So I still think there could be another push to new highs, maybe 2680, 2700, and that's coming up pretty soon. So we'll see if we get that Santa Claus rally into new highs next week. And hope everyone's enjoyed the week with all the great analysis by the team. Hope more of you have considered having this page on your workstation at your fingertips whenever you need it to get great analysis and different methods of analysis from the team. I know that for me it's an advantage if I want to know what Nick is saying, and Blake, and Grega, and Stelios, and Mr. Discipline, and I've shown you guys how I use it. I still use, I trade what I see, but this is part of my intelligence gathering routine every day, so I may have an idea, and after I have an idea, I'm going to go to the traffic light page, and I'm going to check it out against what my teammates are thinking, what their counts are saying, what kind of formations that they're focused on. So as I've said on many Fridays, Friday's a great day to get on board. It gives you the weekend to go over the tutorials and learn how to navigate around here. Plus, you know that it gives you access, at least as an observer, in the other chat room. So with that being said, I'm going to turn it over to my teammate Steve Volge and see what he's thinking on Friday and a finish of this week. So Steve, how are you today?
Hey Dale, I'm good, mate.
Good, buddy. So TGIF, at least my energy level is ready for it to be a weekend. How about you?
And you know something, I don't think that you are the exception, because as I see the attendance of the webinar, we almost all day have like very high attendance. Today is like 2/3 of what we usually have, which
yeah, well, yesterday was a great. Yesterday, I think we had record attendance in the.
Yeah, we did. Yeah. We had several hundred people attending here.
Blew their wad yesterday.
Yeah, but you know how it is. I mean, after a week with a lot of event risk, I mean, Thursday actually had a lot of event risk.
Yeah.
People are obviously fatigued, and you know, many of them have made, or some of them have lost or whatever, you know, for the week, and probably you know, they just need to clear out their heads and
recharge the battery.
Yeah, and, recharge the battery.
I don't know about you, but I bet if you look back, you probably, if you looked at your trading history, I think you'd find that you do not initiate many new positions on Friday.
Yeah, I'm guessing. No, I don't. I'm guessing. No, I don't. Although I don't have an explicit rule in place, like not to initiate fresh positions on Friday. You know what I mean? It's not that I would walk away from starting a position if on a Friday it met the criteria I had put in place. You know what I mean? But on the other hand, I would easily postpone the decision to do so if I didn't believe that the market would run away during the weekend, or would. Yeah,
I hear you. But normally, unless there's an NFP, some type of red event, Fridays for most people in my career has been kind of like a book squaring day and kind of a planning day. I start thinking about next week today. So, you know, I look at the way things finish on the week and start looking and screening whether or not that's going to be a continuation type trade for me, or I'm going to be looking for some type of reversal. So that's what Fridays mean to me. And of course, happy hour.
Yeah, happy hour.
Starts a little early here in California, man. So
is it a very popular thing in the US as well? I know that it's in the UK. I mean, I remember when banks and companies close in the UK, people just pour in the pubs and. But I didn't know how popular in the US it is.
Very popular. And when I was a bachelor in the old days, I used to lay out nice spreads of food. So, you know, I'd work out, I'd play racquetball or something, then I'd go into the bar and have a couple drinks and eat dinner at happy hour. So, yeah, it's a big tradition here. You used to get a lot more things free than you do now. Now you just get reduced prices. But when
other than that, our problem theoretically is low inflation.
Yeah, right. That's what I mean, right?
Because every consumer just wants more inflation, right? I mean, don't you beg for more inflation?
Oh yes, for housing and food and everything I spend my money on.
Yeah, every time you pray, first in the list comes inflation, right?
Yeah, I don't know what they're talking about, low inflation. My housing costs have increased, I don't know, 100% in the last 15 years.
Yeah, but you can buy a television cheaper. I mean, doesn't that compensate?
Maybe I'll build some type of residency with flat screens and live there.
Yeah. Build walls instead of using bricks and concrete. Yeah.
Yeah, buddy.
I have no idea how good the insulation is in flat screens, but I guess we'll find out.
They probably don't weather well. A rainstorm could short out your whole house. So anyway, bro, let's take a look at your charts. EG
Absolutely.
Challenging that neckline again today. I think it has destiny to break out.
Let me share my screen. Okay, you should be able to see it now, right?
Got it, buddy.
Perfect. As you showed in the 4-hour chart, yes, we have a good-looking inverted head and shoulder formation. You can see it even on the daily.
Yeah.
Obviously, the 88, let's call it 40 area, but for me, most importantly, the 88-60 area. I know it's a little bit higher than the neckline, but this also is an area that we find the 50 DMA. We also find it's an area that has created a lot of instances of rejections. I mean, acted as support and resistance multiple times in the recent past. So I think that above 88.50, 88.60, we can then be looking for at least a move towards this descending channel once again.
Yeah.
So there is a good reward to risk ratio here, although I would advise against people jumping the gun. I mean, if we actually reach this area, which is like just below 90, I would be careful there. Perhaps I would book some of the profits if that move works out, right?
Just a guess. I'm thinking, we have that stop hunt underneath your formation.
Yes.
Maybe the possibility is people look at that as a breakout when we get up there and get above it, and we get a stop hunt above it and just head to your 61.8 level up around 90.
Might be the case, but definitely it wouldn't be surprising to me if we see another rejection from that area.
Yeah.
So we can keep on holding.
Those stops. If they get up there, Steve, they're going to clean out those stops. I mean, I'd bet at least $1 on that. A Duke bet.
Not going to be the first time, as you very well know.
Yeah. That's how that's their destiny in the market, is to clean out stops. See all those. So I don't think they'll miss that opportunity if they get up there to trade 90.40 or so to take out every bear that's looking for 84.
Might be the case.
And then it fails without them. Yeah.
Might be the case. So EG looks good.
And listen to you.
EG looks good as long as we actually break from that area. I mean, it looks good. It should yield like 150 pips more to the upside if we actually clear that level.
Right.
Now we have a question, and it makes sense. After the ECB yesterday, the question was, why did the euro fall after the announcement yesterday? Does it strengthen? Why is it so weak against commodity currencies? Okay, so let's address these questions one by one. Why did the euro USD fall? Because first of all, did it really fall too much? No, it didn't. It didn't, considering that Draghi and the ECB came out a lot more dovish than anybody would expect. The question, though, is the following: did this move after so much dovish commentary from 118.60 down to 117.80 roughly? So we're talking about 80 pips. Does this constitute like a big bearish move? Absolutely not. Considering how dovish Draghi wanted to be, despite revising higher growth and inflationary projections, etc., I think that you know, the move lower was quite muted, and we are already seeing today, we're already like paring back some of yesterday's losses. So did the move yesterday turn me bearish? Absolutely not. Absolutely not. I believe that even if you zoom out and look at the euro since the beginning of the year, there is absolutely no question that the euro remains constructive. And if you're looking at medium to long-term trades, I would say that you should be buying the dips. Now, if we look at it in the short term, I know that somebody can even make the argument of a head and shoulders formation. There it is, like shoulder, head and shoulder. And somebody can say that as long as we remain below this zone, I mean, I said it yesterday, you cannot turn outright like bullish immediately. Obviously, this is an important zone. We tested it yesterday, we got rejected. But that's the short-term view, right? In the medium-term view, I remain constructive. If we break above this, let's call it 118.60 area, I will be even bullish in the short term, right? So nothing has changed in the way I view the euro USD. I see it in a constructive way, and that's it. Now, having to do against commodity currencies, obviously, oops, that's what happens when you put your hands on the wrong buttons. Obviously, if you look at the commodity currencies, obviously, being the euro a little bit weak during the past several days, and finally seeing a recovery in the commodity currencies, has created some moves lower. This was also a nice head and shoulders formation. We were viewing this as an ascending wedge, but you know, yesterday I noticed that we were just breaking below a head and shoulders formation, which, you know, doesn't have like a very long target. It targets like less than the 152.20 area that we are monitoring anyhow. So we had said that we were seeing like signs of a short-term top there, but still nothing has changed in the fact that this uptrend so far is not invalidated. It's 100% valid because we still have a series of higher lows, and as long as this confluence of the horizontal resistance area now can act as support and the trend line support holds at 152.10, I don't think that you should be really looking for much downside in the pair. Okay, so if you actually like traded the reversal like near the highs, that's great, that's good. But you know, as we approach this area of supports, you should probably be careful. If you saw, we drew this several days ago. We were seeing the possibility of, you know, a continuation lower, you know, perhaps towards this area, and this is exactly what we're seeing now. Regardless, don't lose the big picture. The big picture is that the uptrend is still intact. Okay, Euro Kiwi, more or less the same thing. We were in a range here, but we broke below it. We were seeing this as a possibility. It's happening, and now what happens from here? The 166.50 to 166.80 area, quite important support. Let's see what happens from there, because it's very likely that we're going to see a reaction from there. You know, in the same way as seeing the pound pairs. By the way, let's have a look at the cable first. The cable today is suffering like, what is it, the fifth rejection from this channel's resistance, but I'm still viewing this as possibly as a bull flag. So, you know, we are getting rejected from the same trend line again and again, but on the same at the same time, the equivalent support is holding again and again. So coming in this formation after a bullish move, and as long as this does not get too much prolonged, I would say that my initial thesis from when we started correcting lower, that as long as we remain above this support resistance area, which also has the 50 DMA in it, like above 132.50, ideally not below 133, you know, the bullish interpretation is still a possibility that has at least 50% chances, in my opinion. So I wouldn't be jumping the gun being bearish the cable, and more or less the same applies to pound crosses. The pound Aussie is approaching the ascending channel support. I know the move lower has been very strong. This is the 6th consecutive day that we're moving lower. And the only pair that actually looks like somewhat broken is the pound Kiwi, because the pound Kiwi is the only one that has actually broken below this ascending channel. So other than the pound Kiwi, everything else looks still, to be quite constructive. And in this case, even the pound Kiwi, I care to see what's going to happen when we retest this major blue trend line that was the resistance of a very prolonged bottoming, possibly bottoming formation, right? So even the pound Kiwi on the medium term is not really broken. It would have to break below 189 to start worrying that perhaps this was a false break higher and something else is brewing here. Okay. Until then, statistically speaking, the trend is your friend. Okay, let's have a look at a few other things. First of all, let's go back to the DXY. Okay, the DXY came back to retest the 94.20 area. Once again, this area acted as resistance. Other times it has acted as support. As long as that's the case, you cannot turn really bullish the US dollar, and given the price action of the rest of the year, probably a resolution to the downside is more likely than not. On the other hand, if you're looking for a more short-term time frame, we would also need to see like the 92.80, 92.90, 93 area break to the downside to confirm that the index is going to accelerate to the downside. So currently we are like in between resistance and support areas, with the chances of a break lower, as I said, being higher. But on the other hand, what are you supposed to do here? Probably nothing if we're talking about the index itself, right? So just putting that in context. Let's have a look at the USD yen. The USD yen is dripping lower after, we have obviously had a very strong move lower, and then yesterday we just keep on falling, today as well so far. Where is the next area of support? It's this zone. It also has the 200 EMH, the 111.60 to 112. It's it's an area of interest. It's the 38.2 of this move higher anyhow. I guess that if we draw a fib from the recent move, might be a fib here as well. It's also roughly, the 61.8. So, multiple supports around this area. 111.90 is the, let's say, the medium price of that area. So let's see what happens from there. Now,
hey Steve, look at silver and gold right now. They're popping into new highs. Just in case I know you're not looking. It's hard to look and do analysis at the same time and keep your eyes open. Silver's popping here, especially if you just look at intraday.
Gold especially is making a move here.
Yep. Okay.
Gold especially is making a move here. Yeah, absolutely. So the question now with gold is what happens when it comes back to retest this broken triangle support as resistance. So for me, that's going to be like the major test there, because if we get rejected from there, there is that keeps the metal in bearish mode. But if we actually break back into the triangle, then it's a whole new different game, right? I'm still short. I have one entry from 12.89. The other entry is at 12.65. Most probably, I have my stops, my orders to get out at 12.65. So in this case, I'm going to book profits on one of my positions and get out to break even to the other one. So I'm not really worried about it, but it does look that it's it's putting in a stronger rebound. Silver, on the other hand, is somewhat underperforming as it seems. It still hasn't broken to new highs here. But yet again, the important level to watch here is the 1630 area. So let's see what happens if we retest 1630, because unless we break above it, there is still not much to discuss about being bearish silver. But definitely, they are putting an effort to recover somewhat. Now, what I was saying about the USD yen is the following, that personally, I'm not involved with it. You know, I had a discussion with one of our members in the chat room yesterday about the USD yen, and they told him, listen, I just don't want to be involved with it simply because it's trendless at the moment. I mean, obviously, we are watching at this major descending trend line because we know that you cannot turn bullish unless we break above it, right? But on the other hand, can I turn bearish? No, simply because just look at it. I mean, it has been chopping around, you know, for several months now, actually for almost the whole year, but, you know, it has failed to produce any real follow through in either direction. So is the USD yen the pair you should be trading? Depends. If you like short-term trading, why not? If you're looking in, you know, catching trends or like staying in positions for longer, no, it's not. So I just, you know, keep monitoring support resistance areas, and I know one thing for sure is that unless it breaks above the 114 area and this major trend line, or it breaks below at least, let's say, 110.80, there's nothing to do here. Nothing to do here with conviction, at least. Okay. Let's have a look at the Aussie and the Kiwi as well. Okay, the Aussie got rejected today from the 200 EMA for now, of course, because we're still early in the day. In my opinion, now that it has broken above the 76.40 area, more or less it should come back and test the 77.40 area. So I think that even if we see a pullback, we should at least see people stepping in to push it higher at least one more time, right? So I would not be selling the first pullback we would be seeing. Although I remain bearish in the medium term, I think that this move is quite strong, and you know, it shouldn't run out of fuel just because it's going to give us an initial pullback. And Kiwi is no exception to that. Actually, if it wasn't like the middle of December, and if I wasn't looking to take off positions, you know, by the end of next week and stay flat until the beginning of next year, that liquidity is going to come back in the markets, I would probably be buying the Kiwi, because the Kiwi came back and retested the breakout area and this important like 69.70, 69.80 support resistance zone. So yesterday's pullback in the Kiwi was a great buying opportunity. If you're looking to be involved at the moment, we came back, we retested, and you know, this is a good opportunity to see at least one more move higher. 71 is the next target, most likely. The 200 EMA is up there. It's also a nice round level. Even higher, perhaps, the 50% fib. And even if you extend this channel resistance, you see that, you know, it might end up like confluencing at some point there with the 50% fib. So I would be, I'm going to be monitoring this extended resistance area of the previous channel we were trading within, and the 200 EMA and the 50% fib. Anywhere between them, if I see some big rejection, I'm actually going to be looking to sell into it. But I don't think that the Kiwi is done correcting higher either. Okay. So I think that for a short period of time, at least they should remain constructive. Now let's have a look at the loonie. Oops. There it is. The loonie is back again in the middle of the range, and you know, as long as that's the case, not much to do here. I would still favor, I would still ideally would want to see like a break higher from this range for one last hurrah to the upside, probably 131, 131.50, and I would be looking to sell into that, but I'm not sure we're going to see that. Also, an update, I added to my position on the USD NOK yesterday when it actually retested 829, so now I have a full position from here. I'm still looking for the NOK to probably break lower. We'll see if that's going to play out. But you know, I'm bearish. I remain bearish this pair as well. And let's have a look at some of the stock indices. Okay, the DAX is testing once again the channel support. I would really want to see a break lower from here for one more leg lower towards the 12,500. But you know, if a lot more days pass and we don't see that, I'm going to start getting worried about this interpretation, but not yet. Okay, same deal with the Nikkei. And in essence, you know, I've started viewing the Nikkei. If that doesn't play out, another possible interpretation is a triangle. So in that case, we should not at all break below this trend line, and we should probably just thrust to new highs from there. But for now, I still favor the possibility of a break lower from here. Okay. And let's have a look at the SPX as well, because yesterday we finally saw a decent move lower. The question is, will we get any follow through? Because so far today, and before even the markets open, we've like retraced like, I guess that's like 68, 67% of the move we saw yesterday. So from a technical perspective, that was a very nice area to get rejected from, but obviously one day's sell-off is not enough to constitute any type of a reversal. So we need to see some kind of a continuation lower. I mean, we haven't even broken the first area of support, which is at 26.45, and we haven't even put a short-term lower low, which would happen if we broke below the 26.20 area. So unless any of that happens, you know, yeah, okay, there's a potential for a reversal, but how many times could have somebody spotted that during the last year, and how many times did it actually play out? Like almost no time. So you know, you should still be very, very careful when you're trying to top pick indices, especially the US ones. CAD yen and Aussie yen. Yeah, let's have a look at them. Okay, before we go to the daily chart, I just want to show Aussie yen, Kiwi yen, and CAD yen on the weekly chart. Okay, I know that we've seen a major rebound in the Kiwi yen, but this is the weekly picture. So, you know, you'd better have this in mind. So on the weekly chart, we put in a major breakdown from this trend line, and we haven't even retested it. So I wouldn't jump the gun being bullish here, because if we get rejected from this trend line, this is obviously a confirmation that the move lower is not done. I repeat, these are the weekly charts, right? And more or less the same applies to the Aussie yen. It's currently testing a channel, you know, a broken channel. So going down to the daily charts, let's have a look at the Aussie yen and the Kiwi yen. So the Aussie yen is still within what would be seen as a bear flag formation, right? It's a simple so far ABC. The 50 DMA initially rejected price action yesterday at 86.50. So I don't think this is a level I would be buying. Mostly, even selling here would make sense from a reward to risk perspective, right? Kiwi yen also got rejected yesterday from an area we had marked as very important. It's an area that also hosts the 200 daily moving average. It's an area that has acted several times as support or resistance in the recent past. So this is what we had drawn out there. We were looking at two possibilities here in the Kiwi yen, either respecting that confluence of resistances here at the 77.50 area, or if it broke above it, retesting this area and seeing what's going to happen from there. So we got to that. We got an initial rejection from this area, which shows that it's still important to the market. Now, only if we see a break above it, once again, we can start looking into bullish interpretations. As long as that does not happen, I would still be inclined to be looking lower. Now let's go to the CAD yen. Believe it or not, although it's one of the few, it's the only pair of the one we just saw between the Aussie yen, the Kiwi yen, and now that we're looking at the CAD yen, the only one that hasn't put a strong rebound recently, it's the one that looks more constructive to me. Why? Because simply it was in an uptrend, and the move lower in CAD yen, although it has taken several days, has been extremely well behaved and channeled. So to be perfectly honest, in the short term, obviously I cannot be bullish the CAD yen because it remains within this descending channel. But on the other hand, if I look at this formation from looking at the medium term time frame, I would be inclined to believe that the chances of a break higher from there are quite significant, right? So I would be monitoring of this channel resistance, also some horizontal support resistance area like just below 89. So I think any break, let's say above 88, 70, 89, will point to a continuation of the move higher. So I would be more inclined to be looking to buy the CAD yen than anything else. Pound yen and euro yen. Let's have a look at them. First of all, I have to say that the euro yen has been one of the most tedious currency pairs we've seen in a very long time, and you can see why. It has now completed 3 months of being trapped in this range, so I honestly have nothing else to say about it. I mean, 3 months trapped in a single range, a decently tight range given how prolonged this is. You either trade the range or you trade the breakout. There's nothing else to say here, okay? So unless it breaks below 131.50 or above 134.50, for me, this pair is dead. I mean, I just have a look at it once per day, and please wake me up when something happens.
You know what's funny?
What, mate?
I'm sitting here just listening to you dance. I always used to when the markets are slow, and when I would do like the Morning Edge and then Lunch Money webinars, and it was slow, like summer times or holidays, and I'm sitting there just struggling to find something to talk about. All I could see in my head was, like when the gunfighter like shoots the bandit shoots the pistol down at the ground and makes somebody dance, like dance.
Oh yeah.
That's exactly how I'd feel sometimes when like there's nothing going on and I needed somebody to something to talk about, yet there's no help from nobody, and I'm like, okay, what do I look at next?
But you know something, we do have some help because there is a friend here saying the following.
Oh, good.
Let's make a deal. Make some analysis on USD PLN, and I will subscribe to ForexAnalytix again next year, Robert.
Oh, there you go. Well, now take a look at the zloty against the euro.
Yes, right.
Right.
So Blake,
I'm not looking. You go ahead. I'm busy. We're trying
What
to
do you
figure out if Joe in the chat room likes Justin Bieber or Justin Trudeau. That's the hot on my agenda at the moment.
Very, very true.
Has
But tell me
nothing to-
something.
What?
What do you think?
I'm not even
Well-
looking at your screen. Hold on. Yeah, I mean, it looks like it's going to be a potential short, but obviously, if it breaks the upper end of the trend line, you got to be long. So
Exactly.
that's it. I mean, there's no, and it's in the middle of the wedge, so it's going to be extremely choppy and messy, and there's nothing to do right now. But
I must say, what is it? Is that palladium?
No. It's the zloty against the US dollar.
Oh my gosh. Okay, I'm going to have a pierogi.
So let me also have a look at this, and I'll tell you. Actually, you know something.
What's
this
that?
this is not a bad trading opportunity. I mean, not for now, but it's quite a clean setup. You get a break below you get a break below 350. Boom.
Yeah, then you just got to watch the 618, and then if it drops below that 618, closes below it, you add to it. You just so you start off with like a kind of like my opinion, just off the top of my head, you would start off with a kind of a smaller position on a break lower, breaks through the 618, then you add, then you move.
Then you add, exactly.
Then try to ride it out to 78%. Now, if it breaks higher, then there's going to be a nice little short covering rally, and you can be on the long side.
There you go, mate. Okay, waiting for your subscription, Robert.
There you go. But
Hey, Rob, is that home currency? Is that where you trade from? You trade from Poland? I'm just curious. Okay. Robert asked. Okay.
Yeah.
So right now, I mean, regarding that pair, there's nothing to do. At the moment.
At the moment, at the middle of this wedge, absolutely not wedge. Actually, it's depends on how you say it. Somebody will say it's a flat bottom triangle. Somebody will view it as a wedge. It depends. Let's see how it evolves. But honestly, we're in the middle of it. There's nothing to do here. Nothing. But
right.
We will soon have a trade.
Just curious.
We will soon have a trade here. There's no question about it. And there are good chances that a break is actually going to see follow through. So I don't think this is a bad setup actually to monitor. It's not a bad setup to monitor at all.
Yeah. Hey, one of the things since I'm going to be gone next week, and volumes are going to probably thin out, and especially towards the end of next week, and I know we're going to be broadcasting through the holiday period between the Christmas holiday and New Year's. One of the things that I always enjoyed doing, just to show people how diverse this group is I like to ask people where they're at right at this moment in time, and where they're from, and because Dale just asked, and that's always fun for me, and it's fun for the other viewers too, because they go, oh, I'm in, I'm here in the UK, who else is, and they hear somebody else is from the UK. Oh my God, so and so's listening from the UK, and then it's pretty neat. It's always fun.
It's a small world after all.
It is a small world after all, isn't it?
So Blake, Bitcoin new highs, by the way.
Yeah, Bitcoin. I mean,
huge surprise.
What's that?
Huge surprise. Who would have expected that?
Looks like a third drive.
So there's a lady that I know. She is a. They're empty nesters now. They're empty nesters, but she's unemployed, just retired. I think she does like volunteer work, and she's actually a younger couple that we know, their parents, and we actually vacationed with them in Oregon last New Year's, and she and her husband's kind of like on his way out, retiring from like he's a you know, the CTO of like this Brazilian oil and gas company, and he's
Blake,
from Canada. Yeah.
Blake, something's happening with the pound, mate.
With
it's
what?
Getting crushed. The
Wow.
pound.
Well, this because the euro pound. Take a look at the euro pound really quick, and look at the inverted head and shoulder pattern. It's getting liquidated right now. Look at the intraday chart. And if you use ForexAnalytix, and you already got the update as it was happening. Yeah, go to an hourly chart. You can really see it. Yeah. So the neckline, we just passed through the neckline.
Yeah.
Just about 30 pips ago.
We were talking about it. Actually, it's the first thing we talked about today. The inverted head and shoulders.
Yeah. Well, so I was just saying that this lady.
The host talked about it.
Oh, okay. Well, yeah, Dale, you've been talking about it too. Yeah, I mean, about the bullish nature of it. I just want to say this lady, she opened in a Bitcoin account with like $400 just a few weeks ago, and it's like at $2,000, and she's like, "Oh my God, can you believe this?" I'm like, well, we're getting close to the end. It's getting near. It's getting near when things like that happen.
Yeah, my stepson bought Litecoin. I think he paid $340 for it. So,
oh, great.
Yeah. So,
great.
you know, I mean, when your relatives and friends, you know, that have never done any trading before are doing it, you know. So he said, I told him, I said, look, Chris, look at the money as the kind of money you would bring to Las Vegas, and if you lost it, it wouldn't hurt you. And don't do any more than that. So that's advice I give to my family, is what I give to the public as well.
Guys, I just want to show you something, and if anybody has a question that, you know, cryptocurrencies are in a bubble, I think that's going to be solved here. Just look at this. There is a guy that made an ICO on a coin called UET. UET comes from useless Ethereum token. Now, this guy has collected $200,000, and he says the following: first of its kind ICO. Let's be honest, everyone's tired of ICOs. They get hyped up for weeks, and then they launch and clog up Ethereum network for days. Coinbase goes down for a while, and then investors see the new tokens lose most of their value. This ICO is going to be different. The UET's ICO transparently offers investors no value, so there will be no expectation of gains. No gains means few investors means few transactions, and few transactions means no Ethereum network lag, not to mention no depressing posts on blah, blah, blah about people losing all their savings. Might be secure, definitely not audited. Guaranteed token value, unlike with every other token sale on the market, I can guarantee here and now that the value of UET will not, in fact cannot, reduce during or after the ICO. Since these tokens are worth anything to start with, there is nowhere to go but up.
I like it.
Frequently asked questions. Wait, is this a joke? Is it a scam? Neither. This is real, and it's 100% transparent. You're literally giving your money to someone on the internet and getting completely useless tokens in return. There are no white papers, no products, and no experts. It's just me, your hard-earned ether, and my shopping list. And this guy has actually collected money. Just look at this.
I bet Steve gives him some money. You love the guy.
Honestly, I'm considering it.
I knew you were. You'll be in there.
Just think about it.
Watch it work.
We are living in an era that somebody that goes out and says, listen, I'm creating a cryptocurrency because we are in a hype, that's completely worthless, has collected more than $200,000. Just think about that. And then tell me that cryptocurrencies are not in a bubble, honestly. I mean, I don't care what are your arguments to advocate that, you know, Bitcoin might go to 100,000, a billion, or I don't care what else. But these kind of things that you see here are what you're expecting to see in a bubble. right?
Yeah,
This guy is
systematic.
actually is making fun. He's taking zero legal risks because he's telling in your face that he's giving you something worthless in exchange.
You're going to lose all your money.
Yeah, and
Yeah.
he's getting hundreds of thousands of dollars. Just consider this.
That's amazing.
I'm having a flashback from an LSD trip in college.
Have you seen that before, Blake, by the way?
No, I haven't. I'm not paying attention to all that stuff.
It's amazing though, isn't it? I mean, you have to give it to the guy. I mean, at least he has a sense of humor, right?
Right. Yeah, and it's crazy that he's actually raised money too.
Yeah,
and
he has.
That's amazing. My internet is intermittently going out. I have to restart my router, so I'm going to try to be back here in a few minutes, guys.
All right, well,
Okay.
be back for the interview, Blake. I have Jeremy Schwartz of Wisdomtree. And
Oh, great.
one of the directors of that group is Jeremy Siegel. So he's got
Awesome.
a lot of talent, and they do a lot of ETFs, and he's going to be talking currency ETFs with us. So looking
Really?
forward to that.
Awesome. Thank you,
That
Dale.
sounds good.
All right, buddy.
Dale, by the way, since he's familiar with ETFs, can you please ask him what is his opinion about ETFs, and if he thinks that the explosion of popularity for ETFs might actually create a cascade event, when actually the market goes down, because there is a lot of speculation.
I will. I was going to ask him for his opinion of what are the best bearish ETFs to hedge or spec for a downside move in the market. So I'll ask that too, if it could be a factor for it happening.
If it can actually exacerbate, accelerate, any move lower, since there is now, admittedly.
And you feel free to jump in with a question too, okay? So
Okay, then.
we're about 8 minutes away, so
actually, that's my question. So
Okay.
you can transfer it yourself. Okay, perfect.
okay.
So let's have a look.
At euro pound.
Let's have a look at the pound yen, because I hadn't answered to that question. It was already pending.
Yeah, but how
So-
about that euro pound, man?
It's actually going well. I mean, it's likely that today is going to confirm.
Call of the week.
Oh, I already gave you credit. I mean, that was a great call.
I have ADD, attention deficit disorder.
No, you
I
don't.
never get enough attention.
You're a liar. You don't.
Go ahead, buddy.
Okay, the pound yen, first of all, it's testing the 61.8 and the 50 DMA. So, intraday, perhaps it's going to find support here. So if I was a scalper, I would probably go down to a short-term time frame and perhaps even look to buy it intraday. But let's be honest here. We said, even after getting rejected here, after this false break, but that's why it's important. On a daily closing basis, we never broke out of this high, right? So we said back then that, listen, there is a chance that the pound yen is going to give us the euro yen treatment, which is perhaps it's going to get stuck in a range. So far, the rejection from the 153 area has worked out perfectly. We are now even below the middle of this range. But on the other hand, unless we clear 148 to the downside, which is like a major breakout level, I zoomed out so you can see it, I wouldn't be jumping the gun. So, and even to be honest, even if we see like the depreciation going on with the momentum and it gets oversold, I might even consider buying 148, at least for a short-term bounce, right? So, if you actually went short after this rejection, perfect, but shorting or going long at this exact point in time and being more or less in the middle of the range, nah, I don't think it's the best of ideas. You know what I mean? Okay, any other requests for any other pairs? I know the market has been quite slow besides the pound. Anybody wants to see anything else? Let me see if crude, by the way. Yeah, you know something, I want to show crude. The reason I want to show crude is because crude remains extremely well behaved. Once again, it came down, it tested the broken channel resistance as support. This is the third time it actually does that, and third time it held. So now this looks to me like a triangle in a bullish trend. Triangles in a bullish trend are expected to probably break in the direction of the trend. So be careful, because being short crude at the moment is like a dangerous proposition, in my opinion. You definitely want to see this trend line break to consider that as a possibility. And even then, I would still be worried about the 55 area acting as support, right? So as long as this trend line holds, if I had to be doing something with crude, would be to be long and nothing else. Let's see if we have anything else interesting. Yeah, actually, you know, we've been talking about this on the webinar quite a lot, the Euro NOK, and I wanted to show it because this is also a well-behaved pair. Yesterday it was appearing like it might break lower, and that's why for me it's very important to see daily closes, because, for example, if you were trading this confluence of supports, the ascending channel, the horizontal support resistance area, you might have gotten triggered short, and then the Euro NOK just pulled back, and today it's rebounding further. So the Euro NOK remains constructive, and it's a well-behaved pair. I really want to be shorting this, but I don't want to do that until I get confirmation. And so far, you know, it's holding nicely above this 973, 975 area. So, you know, nothing to do here but just look at it go higher, and unless you see it break below. Okay, Blake, you're back, I hear. Yes.
That's me, Steve.
No, Blake is here as well. I could hear him. He has his microphone on.
Yeah, I'm not sure how the connection is going, but anyway, hey, just be careful.
Else you wanted to show?
Yeah, well, you know, let me just go over the euro really quick, and I know
sure.
I got just a second.
I'm passing the screen.
Okay. Here we go. Okay, so here's the euro dollar, and the euro dollar. This is really intraday. This is actually pretty big resistance here, and just technically speaking, you know, if you're bearish, you don't want to see back above 118.10, and we're close. I mean, we're within striking distance of that, and the dollar just rallied a little bit. You saw the dollar rally, and I think the dollar index was really more or less rallying because of, you know, the cable, and because the cable was selling off, because it wasn't against the yen. You know, the Aussie, you know, came down a couple of pips. The Kiwi came down a couple of pips. You know, the Swissy rallied a little bit. The Canadian popped a little bit from the lows, but you know, actually the Canadian, in my opinion, you know, is probably doing something more like this. If I had to guess, just guessing.
Is there any news behind the cable weakness, Brexit news or anything?
Not that I saw, but you know, I think it's a lot of times it's cross rate effect too. I mean, you got the euro pound that's you know, making a move, so that's having an effect on the pound. But going back to the euro dollar, if the euro dollar breaks through this 118.10 level, that's probably going to put some gas in this, you know, some dollar weakness. So be careful if you're buying the dollar right here. I think the dollar, you know, bounce that we've seen, you know, intraday. This is a 5-minute chart of the dollar index. It's just, overall in a, very, very, sorry, I was just looking at some news coming out. It's just kind of consolidation, but overall, I think the dollar's, it's really being weighed down, as far as the dollar index is being weighed down as long as it stays below the 618 retracement. So, and from the FOMC decision 2 days ago. But anyway, Dale, I know it's time for your interview. I want to pass it over to you. Just remember, euro dollar above 118.10, which is basically the highs of the day. If it starts hitting new highs of the day, just be careful with the dollar here.
Thank you, Blake.
You're welcome, Dale. It's all yours. Thanks, guys.
Thank you, buddy.
Bye, Blake. Enjoy the interview.
All right, Steve.
Thanks,
Have a great weekend, everybody.
Yeah, have a great weekend, everyone.
Okay, so before I pass the baton over to Jeremy, I just want to show the crowd he hangs out with. Jeremy Siegel, everyone knows who he is. So Jonathan Steinberg, some heavyweights. There's Jeremy, and with that, Jeremy, I'm going to pass you the baton and make you the presenter. Looking forward to meeting you, hearing your voice, and having a conversation about where we stand near the end of 2017. Jeremy? So you have to activate your mic so that I could hear you. Let's see. Okay, you're on the phone. How about now? Still can't hear you. Says you're self-muted. So if you could hear me, you have to go to the now.
Can you hear me now?
Got you, Jeremy.
Perfect. Sorry about the confusion.
All right. Thank you so much for joining us today, Jeremy. It's great to meet you.
Excellent. Thanks for having me here.
Okay, so your title is Director of Research at Wisdomtree. So congratulations on being with one of the heavyweights in the ETF industry. I'd be interested, let's call this point B, Jeremy. Tell us a little bit about point A and how you got involved in the industry, and a little bit about your road less traveled on your way to Wisdomtree.
No, I got a very lucky timing. I heard you mention Professor Siegel. I've been working with the good doctor since 2001. I got very lucky timing. I was at Wharton in 1999 after he was working on his book. He had published Stocks for the Long Run in 1994. He did a second edition in 1998. And he started, he basically gave Vanguard a lot of free publicity, said buy the market, buy cheaply, until really the tech bubble, where he started writing op-eds in the Wall Street Journal. Right. Starting in April of '99, are internet stocks overvalued? Are they ever? Followed up by big cap tech stocks are suckers bet in March of 2000. I met him right after that article came out, and really started working for him a year later, and been really working with him ever since. And a lot of the research that went into the book I helped him write, The Future for Investors, came out in 2005, was how do I protect investors from bubbles? And Wisdomtree was doing a lot of research on similar concepts, sort of reweighting indexes away from market cap towards fundamentals. And we met them in 2004 as the book was getting final stages. And it was just sort of a perfect marriage. Professor Siegel invested in Wisdomtree at the start. He liked the approach because it was very consistent with our research for the book. And, he joined as a strategy advisor. They brought on me to lead research, and I've been there officially since 2004, 2005.
Yeah, I mean, some people call it luck, Jeremy. I call it that you were blessed greatly. To, some of the winding, broken roads that people take in this industry, for you to, ended up working with someone that was your professor that has called major turns in the market. To have a mentor like that is really, almost providential. So you did something right. I don't care if you believe in karma or what, but what a great break for you to, not have to go through a lot of the heartache that people do in this industry. I'm sure you've had your rough times. Everyone does, but congratulations on that journey. So now that we know that you know, you have a silver spoon in your mouth when it comes to the business, why don't you tell us a little bit about what you're thinking? Yesterday we had a brief conversation. You said you wanted to talk about some currency ETFs. I have some other questions for you, but perhaps you could give us your view and what type of ETFs that you're focused on going forward, since we're near the end of the year. What looks good and what looks compelling going into 2018?
Very good. Well, I appreciate that. You know, Wisdomtree, when we started out in 2006, we launched a lot of dividend-weighted equity strategies around the world, and those were trying to protect investors from valuation risk and really solve for valuation timing. We really have become known for currency hedging equities. Our two largest ETFs at the firm, we have about $9.5 billion in a Japan currency hedged ETF, that's DXJ, and we have about $8 billion in a European currency hedged ETF, which is HEDJ. You know, we were the first firm to think in the U.S., really, what is the role of currency in portfolios? Why do people do what I call a double-decker strategy, which is most people...
Well, you're hedging the currency.
Yes.
So a lot of people would make money on the asset appreciation, but then give it back on the currency depreciation. Is that correct?
That was exactly the case for Japan. You know, we were the first firm to take out the yen, so you could just buy the Nikkei stock or the Japanese listed stocks. And in 2012 to 2014, as the yen started depreciating, we were the first firm to focus on that. And, you know, when the yen was going down and the stocks were going up, you didn't want to have that yen. Now, broadly, I still think that concept is just in its infancy for the broader national markets. I'd say like 20% of Europe and Japan ETFs or assets in general in the U.S. are now hedged. But I think there's about $2 trillion invested in international stocks that package the stocks and currency together. And I don't think that's really the appropriate long-run strategy. I think people should be thinking more actively about it. They should have a view. Do they want the euro? Do they want the yen? And if they don't have a view, they should more often start hedged. Or they should have a systematic model to try to adjust that, which is really our latest thinking, trying to create a rules-based alpha signal on top of the equities to try to dynamically determine how much currency you want.
Does Wisdomtree have a dollar view now or going into 2018? I think the big question for currency traders is, from the beginning of last year, the dollar index sold off probably comparable to the UUP. It sold off from 104 to the 92 level. We've recovered in the last few months. The question on a lot of currency traders' mind is, was that a correction in a bull market with one more blow off to come, or was that a cyclical or even secular high, and that you should be selling strength in the dollar on every rally?
So I was alluding to the fact that we now sort of have this dynamic factor model to try to determine how much hedging we should do. You know, in some ways, if I'm looking at sentiment and flows, I think we came into the year really expecting a strong dollar. Well, the dollar moved after the election.
Trump got what he wanted, didn't he? People were sort of peak Trump pessimism, I think, in a lot of ways. And every flow, every dollar that went into international ETFs this year, over $100 billion, went unhedged. So you can just see the sentiment is going back toward layering this currency on top of equities. And I think, you know, if I'm just doing a sentiment trade, I would lean against that. I would be more in favor of the dollar. But if I'd say, how do I systematically determine it in some of our rules-based hedging programs, we have this three-factor model: momentum, carry, and value. This was the data as of 9/30. We show it on our website every day, so you can look currency by currency to see what it is. It's really only momentum that will change more. You can see as of 9/30, it was all pointing towards a weak dollar, stronger foreign currencies. Not a single currency was hedged on the momentum signal, while you have rates which suggest a stronger dollar. Only against Australia and New Zealand are you paying something to hedge, versus you're being paid 1% plus in the rest. And then value on our model, only is the euro not hedged fully. We have a half hedge for things like the yen and the pound. We have a full hedge for Swiss and Norway.
So it roughly, if you look at our
unhedged would mean you're more constructive that underlying currency.
Yeah, less of a hedge.
Okay, got it.
So roughly, you can see we're only a third hedge the euro, half hedge the pound, half hedge the yen. You know, so for the major international benchmarks, it's roughly 40 to 50% hedged today.
Okay. All right. So that's the way. Do you trade any of the individual? Does Wisdomtree sponsor any of the individual currency ETFs?
You know, we do actually have a straight currency fund, USDU, for a strong dollar. So that was tied to the Bloomberg Dollar Index, which is, you know, versus the DXY, which is much more euro focused. It's a much more diversified. It has some of the emerging market currencies like Mexico and Korea, I believe, in there.
Okay.
That's a long currency on the dollar. We also have CEW, which is our emerging market currency fund, which is a basket of equally weighted emerging market currency. So that's sort of like our weak dollar play for going long currency ETF. And we do some things like Brazil and China as well for sort of the one-off currencies.
Okay. Do you want to talk about rates at all? And I know that you probably have many ETFs on different durations in the bond market. Are you starting to see, because of all the money that actually during this bull market and stocks flowed out into bond funds, that people are beginning to use ETFs to possibly hedge their bond portfolio or take spec positions for an interest rate rise?
You know, we do have a very interesting set of fixed income ETFs. Let me just go to my website and pull up let me just pull up where you can find more information on that. So we do have this category, income ETF, interest rate strategies, and you'll see we have 5 ETFs listed under interest rate strategies: aggregate zero duration, aggregate negative duration, high yield zero duration, and high yield negative duration. Where we've seen, and then we have this U.S. floating rate treasury fund, which is sort of treasuries with the floating rates that reset. It's sort of the shortest duration treasury fund you can get, so the rates reset every 2 weeks. You know, we've seen the most interest in high yield zero duration, HYZD, because you're picking up some good rates in terms of yields, and then, but then you have zero duration risk. I'm sort of just pulling up the website here. You know, the average embedded income yield is 5%. You see basically a zero duration. And so there you're collecting the spread essentially on the high yield credit spread versus taking any interest rate risk. And we do really do the opposite too. I mean, you could go negative duration. If you wanted to say, how do I get paid to bet on rising rates? HYND has a -7 duration, and you're being paid this embedded income yield of 4%. So you're not like costing to short. Now, of course, there's that credit spread, and if equities, you know, blow down and the credit spread get blown up, this is the exact opposite of where you want to be. This is if you have a recession, this is going to be down the most. But this is sort of one interesting way in terms of hedging duration is you get the -7 duration with the credit spread. But the high yield zero duration is definitely slowly and surely gaining traction for us. I'd say the other strategy that we're seeing a lot of interest in, where a lot of people have gone to active fixed income managers, we have this yield enhanced ag, AGGY, which is essentially core fixed income, but reweighting towards a little bit of, it's all within the investment grade, sort of priced very aggressively at 12 basis points, that constrains duration, tilts to credit, tilts away from treasuries, embedded income yield of 3%. And so we're definitely seeing some, that's probably sort of a slow and steady, it's about 250 million of assets. We're seeing a nice growth in that ETF of just sort of what we would call smart beta for fixed income, where you're reweighting the ag instead of just being market cap weighted, more towards yield with constraining duration.
Okay, well, you gave me a nice segue when you talked about the negative duration ETF that would not work for you if there was a risk-off move in equities and we had a big flight to quality into bonds. And recently I saw Professor Siegel on CNBC, and he was completely right, even underestimated it to some degree, the strength of equities. But I do recall him saying during that interview that 2018 was not going to be like 2017. It was going to be a more difficult year for the market. It wasn't like he was getting bearish, but it's the first time I've heard him not be completely sanguine about the market. Do you know what he's seeing and what he thinks, and do you concur with it?
Yeah, he's mostly thinking, we're running out of catalysts in terms of what's going to push the market higher. We had, very strong earnings growth this year, and everybody's been looking forward to this tax change that might get corporate taxes lower and boost profits. So maybe we get 8 to 10% profit boost in large caps and maybe 15% profit boost in small caps. But that is increasingly getting priced in. Now, I wonder, just anecdotally looking at some individual small cap stocks that I track, like if it's actually been priced in or not. I'm not sure it has been priced into all of them. I haven't seen some big jumps as the taxes have been happening. So there might be more, of actually the tax changes actually getting priced into earnings estimates. So we'll have to see how much really does, how much do analysts move up estimates once the corporate tax rate is finalized. But that's what he's really thinking, is that that we're getting priced in on tax reform. We've had very strong growth, and you need to see continued earnings growth. Plus, you have the Fed tightening.
When things couldn't look any better, they usually don't get much better. So that's kind of what he's thinking. I have a question from one of my teammates, and the big trend, which has been towards your segment and niche, has been passive investing by people buying ETFs, specifically spiders. Steve would like to know if and when we ever got a market correction, if that can actually exacerbate a decline.
Well, I think that my big picture view on what's happening with ETFs and passive is that fees are coming out of the industry. So in past, people used the active managers and they paid them higher fees.
Right.
And now people are just saying, in aggregate, my exposure was the market. I package all these sort of more expensive active strategies together in a portfolio, and I've had some value managers and growth managers. You know what? When I package it together, it basically looks like the spider or the low-cost beta. So I'm going to just reduce fees. I have a lower expected return, so fees are more important. And so generally, I think that trend is what's happening. Now, if markets were to sell off and flows were to come out, the question is, are people more likely to, is there going to be a huge liquidity gap because more people are likely to sell the ETF than when they had the active managers? And that's a very hard thing to quantify ahead of time if people are going to trade the ETF more than they would have traded their mutual funds. But I think generally it's been a net positive.
It's faster anyway. It's faster anyway. I mean, usually when you sell a mutual fund, they have a couple of days to liquidate and pay you your NAV, don't they? But an ETF, all you have to do is push a button.
Well, it depends if they have cash. It depends if the portfolio manager has cash on hand. If they have like a 5% cash buffer, well, they're not going to participate up in the market. So they, you could say they have a cash drag generally over time if they're using that 5% cash buffer to help pay for redemptions. And that's just another reason why people like ETFs is if they want asset allocation, they want to be fully invested and they get what they want. A lot of people worry about that with fixed income ETFs generally that we were just talking about, that, these active managers, when there's liquidations, they'll be able to choose which bonds they want to sell. And I think a lot of that also is sort of smoke and mirrors, that, there's not really that much difference between the fixed income ETFs and the active managers. We have flexibility in terms of our portfolios that we want to redeem if there's redemptions. And just because you don't see it, like you don't see what the active manager is doing, it's more opaque. So you think they're doing something much different. With the ETF, everything's transparent. So you can see what prices you're collecting. If you're having to sell the ETF when there's no liquidity in the market, you see what the bids are. You don't see it with the active manager. But there's transaction costs there too. So, I think that's the main benefit of ETFs is just it's full transparency on what you can transact at. And, it's not really that different between the active and passive there.
Okay, well, I'd like to wrap it with being selfish, and I have a question for me. So, Jeremy, I'm thinking we trade 2,700 S&Ps plus or minus, 1% in the coming days or weeks. And then I'm expecting a sell-off to 2100 in the S&Ps, about 20% or better to 2100. What would be the best highly leveraged bearish ETFs from Wisdomtree to consider?
You know, Wisdomtree doesn't.
For a scenario
really,
like that.
We don't do a lot of short funds, to be honest. We have a put writing fund, but that's sort of just collecting premium and
Okay.
you know, sort of capping your upside, but
Right.
and maybe better on that market, but we're not going to go up during the declines. So
Okay.
whether it's ProShares or Direction, there's other people who do leverage and inverse ETFs that will either be one time. That's not really our bailiwick.
Okay.
We did launch for
You ought to
a
start
longer.
one. Start one.
Well, yeah, we're thinking about it. There's two funds here: Dynamic Long Short (DYLS) and DYB (Dynamic Bearish). Now here we actually do employ a quant model to determine when we're going to go short. So DYB can go short the market, and actually last January and February it was fully short the market. But the idea is it will have a net 0 to negative beta. So like when our signals don't suggest being short, it's net 25 beta. It has a basket of stocks with a 75% hedge in the most optimistic time. But then it can go short. But it's not short yet. So DYB is one, if you wanted to say, as a strategic bearish fund that will help, you know, that will have its own model for hedging. That's
a pearl. So without even owning this ETF, would just someone who went to your website know when that fund did get short the market?
Absolutely. Every month we make it public. You go to the website right here. Is it on the holdings?
Will you let me know on Twitter, Jeremy, when that happens?
We'll try to make sure we're connected. But on the index page, if you go to the index page, Dynamic Bearish Equity Index, you'll see the hedge ratio here is 75%. And you can see the portfolio here components. It's long this basket with the 75% hedge. And what you would see is long a treasury basket with a -1. And so that's when you would know it's fully short the market.
Okay. What a great interview, Jeremy. I'm so glad I reached out to you. And my hope is you have a Merry Christmas and a great 2018, and not just financially in every way, and that great work. And I think that people should look into this. I don't think there's any strategy that Wisdomtree doesn't cover for people to be able to participate in regular and even very esoteric ways with a great crew and the way you've designed these ETFs. So congratulations on really providing a service for investors and traders to be able to take advantage and exploit many different things in the market.
Very good, and I appreciate that. And you can stay connected with us on our blog. We do daily content on all these different topics: currencies, fixed income, emerging markets, Europe, Japan. So I appreciate your support. Thanks for having us. We'd love to come back.
Okay, Jeremy. Good hunting, my trading warrior brother.
Thank you.
Happy holidays. Thank you again. And thank you, Base. Thank you, team. Remember, don't just count your pips, count your blessings. See everyone next week. Enjoy your weekend. Thanks again, Jeremy. Adios.